Hello guys, welcome to the live stream. Sorry, I was just setting a few things up in the background there. Obviously, big day today, as well as yesterday. So as always, going to just cover a little bit of the data that's come out, a little bit of the data to come. ECB held interest rates 4.5%, and we have the ECB press conference going on. And yeah, we've had some interesting data out of the US dollar actually continuing to fall at the moment. So yeah, we're seeing that continuation to the upside. I actually tried to buy into the dollar a little bit and didn't work out too well for me on euro dollar, which I'll go show you in a little bit. But yeah, we'll take a look at the markets, see how everything's kind of progressed for this week, see what markets we've kind of talked about. As well as always, if you guys have anything you want to talk through, just drop a message in the chat box and we'll go through that as well. Just watching the VIX at the moment, actually. The VIX actually breaking through that 13 barrier and heading towards that 10, which seems to be an area of interest as well. And yeah, so we'll go through a few markets. As well, we had the Bank of England hold interest rates as well today, 5.25%. If we just flick over to the pound, we can see that cable's actually performing pretty well at the moment. We actually came very close to that sort of 125 level. 125 was the sort of target for me on cable for any kind of short opportunities. The only problem I had, like I said in the webinar on, or the live stream, sorry, on Tuesday, was the fact that it's going to be very difficult to call anything this week because of all the central bank data. If anything, I expected the Bank of England to be a little bit more hawkish than the other central banks, considering where the sort of inflation rates are at the moment and the sort of recent cut in national insurance and whatnot. That could support the economy slightly, give people a little bit more cash in their pockets, a little bit more ability to use that money, obviously. Don't think that will have too much of a drastic effect, but obviously they're going to hold interest rates, which they have at 5.25%, but also Andrew Bailey said there's still some way to go in its fight against inflation. So the rate cut from the Bank of England is not looking as likely as it is from the Fed, for instance, and whatnot. So yeah, we were below this kind of 50 moving average as well, which is something we like to see. But 125 was the cutoff point for me, really, for any kind of short opportunities. And I think the low of the candle here before we actually had the announcement from the Fed was 1.25.002. So we were like 2 ticks away from that 125 handle. So if you was short, yeah, bailing out in and around this area was a good idea, because obviously we've seen the expansion now. We've traded through 126 and we're currently trading up at this 127.25, which is a very tempting area to look for a short, really, because it's a big level of resistance. We can see price acted as resistance here in the past, but just look at this sort of aggressiveness coming into these highs. I don't think this is a market where we should be looking at a sort of short necessarily. We should see the trend at the moment's up anyway. And, you know, if we were to breach this kind of high here, we expect maybe a move up to the next levels, which is going to be sort of around this sort of 129 area. I mean, if we breach that, then there's a good chance that we head towards the 1.3, and that's just because of the sort of difference in the sort of language from the central banks as well at the moment. Afternoon, Vincent. Hope you're well. Hello, Raheem. Euro dollar sell. Again, not really feeling that at the moment. I actually think that we're going to probably hit 1.1. I actually did try and short euro dollar. I'll come and I'll show you that position. Yeah, it didn't go too well for me. Like I said at the start of the week, very difficult trading conditions this week. We actually did a lot of our trading sort of front loaded into the first couple of days. Haven't really traded since that. I thought I might try and catch a little bit of a pullback before we saw the continuation. I did expect euro dollar rallies to continue, but this was the area I tried to get in short, which was this kind of previous structure level up at that 1.09 area. And basically what I looked at was the fact that the market had kind of formed this high overnight. We came back into that level of resistance, and I took my first position in here. Now, you know, I like to use these sort of higher time frame levels of support and resistance, and then lower time frame entries. So for these particular trades here, I looked at getting short basically off the back of a change of trend. Now, initially I was looking at that area there to get short. Price came up into that, we rejected, so I got short here. I actually put my stop losses just above these highs. My first target was actually down in this area here. Let me actually draw that a little bit better. It was actually down in this area because I expected buying to come back in at that point, and because of what was kind of going on with the Fed, and didn't quite make it there. We did push down. I probably should have been a little bit more aggressive with my stops here because I was going against the overall trend. So I could have easily bought my stops to break even, but I didn't. Let it go. And then I saw price come back up to the level. So I actually got short aggressive again, anticipating maybe another move down to these levels before that move. And it just didn't go to plan. Price hovered, rallied. So I exited my positions in this area here, which was a good idea in the end because obviously price has moved like, 33 pips above that level. So nothing too drastic. I went in at a very, very low risk as well. So there was nothing really too much on the table there. I understand that, we have big central bank data coming up today. So, we don't want to get aggressive in the markets when we have that type of data. You said euro dollar sell will drop to 1.08789 after setting 1.09015. Yeah, I mean, if your analysis is saying that, but we're trading 1.0947 at the moment, so we're quite a way above the 1.0915 area, or 0.15, quite a way away from that. So you're expecting sort of price needs to come down here first before it sort of trades lower, I guess. I don't like the sell here, to be honest. I did initially on Monday. We were looking to see if there was potential sells here. What we did talk about though previously was the fact that we've got this zone through here. So what we highlighted really was this zone and this zone down in here. Okay, now what I expected was, because we had low volume through this level, was that when price broke into this area here, I expected price to come and test this zone. If it then trades through it, then great, we can look at a continuation potentially to the next level of support. But we didn't have that. Instead, price found support and the market moved higher. We've now broken into this level. So the next sort of logical area, I think, for price to go is these swing highs here on euro dollar. So that's what I'm expecting here. I'm expecting a push back to 1.1. Profit taken there looks good. So I like the idea of 1.1 maybe as an area of interest for selling. But other than that, I'm basically waiting to see if that does come up into that level at the moment on euro dollar. Thanks, Raheem. Yeah, so I'm guessing we're probably going to see a little bit more upside. There's obviously a little bit of volume through here. Just grab that fixed range tool. We do have volumes coming in at 1.0975. So in and around this sort of zone where price is kind of heading to now. We obviously have seen aggressive selling in the past. So this may actually be an area of resistance as well. So, if price kind of comes up into this supporting sort of resistance area here and forms sort of a rejection, maybe you can look at something in and around that point. I'd like to see it overextend a little. Obviously, that's quite an aggressive move. So I'd like to see it overextend a little into these swing highs here. I think that's a better opportunity just from a risk reward standpoint, and, probably get a bit more of an aggressive move in there. But it's going to be tricky. It's going to be tricky. The Fed held interest rates yesterday, obviously, but fairly dovish in tone as well. And obviously, we're expecting those rate cuts to come. So dollars selling off. ECB also looking to be fairly dovish as well. We're just going to have a little flick over to the ECB. So ECB holds rates with inflation sinking, but hastens bond exit. So central bank kept interest rates on hold for a second meeting with inflation tumbling, but said it will step up its exit from 1.7 trillion to 1.8 trillion of pandemic era stimulus. So, they're trying to get back to that 2% inflation goal as well. Like every other sort of central bank at the minute. But yeah, I mean, this could open the door up to a bit of a euro pound move. I haven't actually had a look at euro pound in a while, but there could be some potential in this particular market because of the sort of difference between the central banks. So there might be something to watch out on this chart. I haven't traded euro pound for a very long time, so we'll have to kind of do a little bit of fresh analysis on that one. Kahota online, dollar yen update please. And then Amir said, hey mate, can we get a quick gold analysis? Yeah, sure. Let's just jump over to gold quickly and then we'll head over to dollar yen. Gold, like I said previously, I don't think the bull run is over. I actually think that we're going to see price move back towards that 2075 area, mainly due to the fact that the commitment of trade reports were not really showing any kind of significant selling pressure at the moment, or any kind of significant sell-in. We can see we came down towards that sort of $1980 area as well, which was this support zone, and we found support. The market did trade back to the upside here. So yeah, I think 2075 is the next sort of point for gold. At the moment, we can see, we've come back up into some swing highs here. I keep grabbing the wrong rectangle tool. Sorry, 1 second. These highs in here. So the market's got to breach that to head towards that area anyway. So we may get a slight retracement in here. Maybe that'll give us an opportunity to maybe look at a long on gold. If we have a little look at the hourly chart, what I like to look at is kind of where the lows sit in. So we've got a low around about 2027 at the minute, which seems to have been an area where price did find support in here. So maybe what we've got at the moment is a little bit of consolidation zone. A break of that, hold above it, retest would be something to look at. Alternatively, if price comes down into this area here and holds at that 2030, we'd expect buyers. The worry would be a break of that. A break of that would signal a bit more of a move back to the downside, which would be towards this sort of 1980 again. So I think you've got a couple of areas of interest personally. I like the idea of price coming back into sort of these lows here. If it can hold at this low, then it's a good possibility that we're going to see another move back to the upside. If we break it, I'd be wary that we're going to trade a little bit lower back towards this sort of 1980 area. But like I said, fundamentally, I think gold has a good chance of heading back towards that $2075 level. Amir, props text 2000. Yeah, I think, like I said, if we breach this 2025 level, then yeah, you're looking at sort of 2000 down to 1980 again as a potential support point. Dollar yen, yeah, let's flick over to dollar yen. Dollar yen's actually been one of those markets. You know, we like the idea of yen strength. We were talking about potential shorts up at 146.60. They actually played out pretty nicely in the end. If you did manage to jump onto any kind of moves here, we were actually looking at these kind of highs in here as potential point for price to stall at. And yeah, price did eventually stall here, and it has rolled over again, kind of getting a bit of a consolidation here down at the 141 handle. So I expect a little bit of a rebound, I must admit. Obviously, this is support in here. You've got to think as well, if you're a seller of this market, where you're going to be taking profits. You're going to be taking profits at the areas where buyers have come back in the past. So, you know, a little bit of profit taking here could invite a little bit of buying, which could then see price come back to these kind of levels of resistance again. A breach of 141.60, then I think we're probably heading down towards that 130 sort of 8 handle on dollar yen. But the markets to watch really for me this week were Aussie yen short, Euro yen short. I mean, Aussie yen up in this level here. I actually took a short position on Aussie yen, and I think I talked about it in the no, it was actually yesterday. I actually got stopped at break even. I say stopped at break even. I took myself out at break even, and price went down to full targets, which was a little bit annoying. If I just bring on my trading terminal here, this is where I entered short positions. I like the idea of being short on Aussie yen. I feel like there was a good opportunity here. My problem was holding it through the FOMC event, right? And this again, this comes back to what I said on Tuesday. Very difficult trading conditions come when we see these high volatile events, and this is a week where we've got lots crammed into the week. And in my opinion, I feel like when you do see those weeks, then you're better off looking at your safe haven assets. That was the yen. Okay, so I said that yen would probably get stronger this week. That's due to that sort of high impact data coming out. We also had the strength meter kind of backing that up a little bit. So I did get short Aussie yen. You can see I took 2 positions in here. I ended up knocking myself out for break even because we were coming into the high impact news event. To be fair, my stop loss was above that high, and this is the news spike here. So I would have stayed in this trade, and it would have been a successful one. My target was 94.70. So I would have stayed in that. But like I said, I don't really like holding positions. It could have easily gone the other way. It could have easily gone up to here. And that's the unpredictability of news. So I was happy to just close out a break even again. Nothing really major there. And yeah, we survived to trade another day at the end of the day. So yeah, I did try and get on an Aussie yen short, which we did talk about. But like I said, we made our money earlier in the week anyway. We had that sort of gas short, WTI short, Euro Kiwi short, and so yeah. Ifran had a good Euro Oz short trade yesterday. Now a move on the other side looks good. Trading ranges, yeah. We talked about this, didn't we, on Tuesday as well? Trading ranges is almost better than trend trading. I feel. I think trading ranges is a little bit easier than trying to catch the trend, because I think as well, when you see a trend going, your mind's always almost thinking about where's that top going to come or where's the bottom going to come. And you find yourself sometimes going against the trend to try and catch the top, essentially. That's why I think ranges are actually better to trade. If I just flick over to EuroOz in here, let's just delete this off because I don't think we talked about this in a while. But yeah, there was a couple of different points for me which I thought were pretty good going into this week. If I just go into the 4-hour time frame, I mean, you can see that defined 4-hour range there through this area here. These lows down through there as well. So yeah, I think if you're on about you got short in this market, then I'm assuming you got short sort of around these highs and look to target down at these swing lows in here. You can see the opposite starting to happen, like you said there now. Market's kind of pushing back after kind of dropping towards that 6,200 and is now kind of making its way back to the upside. I think as well, if you look at it from that weekly point of view, you can see these kind of weekly lows down through here as well. So if I just kind of zoom out to these points, see these wicks over here. If I go to a daily chart, these were all these lows, okay, in and around this area, right? So the market's kind of come into that point again, kind of jumped the sort of liquidity point there, and is now pushing back to the upside. So yeah, Eurowaz almost looks good on a range, doesn't it? Especially this kind of 4-hour range. I think if you're looking at trading the range there, you can look at maybe a pullback continuation up to that point there. Euro-Kiwi was definitely on our sort of watch list going into this week. Like I said, I traded Euro-Kiwi short. I ended up profiting on Monday, but basically all I did was look at this trading range in here, and because my bias was more on the short side, I just waited for price to come back in. I actually went short in this area here, took profits down towards that 74.90. Price did actually breach the range high, which I thought was pretty interesting, and I was looking at the sort of this high in here, because one of the things that I do like to look at is looking at those swing highs and lows. And if I go to a 4-hour time frame, just to kind of show you this in a little bit more detail, I had this level marked in here, this zone as well. You can see this high that formed on the 1st of December, and we kind of wicked into it. And I thought, oh, this could be, you know, at the 4-hour close as well, I thought this could be a good opportunity to see price move to the downside. Again, because it was a news day, I refrained from getting aggressive in the market. And, you know, sometimes it pays well to do that. Sometimes it goes against you. This is a day that it went against me because, you know, that was a good short, you know, down to that level. In here, you can see the price comes in, consolidates, breaks, and then it actually forms quite a nice little sort of downward trend. I mean, a long from here would have made sense as well. This is why I say trading ranges is a little bit easier than trying to trade the trend, right? You've got this range in here, and the market is just playing those highs and lows. Actually, we had a question on Tuesday about Aussie Swiss, and this was an even better range, I think. So like if you are looking at sort of trading opportunities and you find trading the trend pretty difficult, trading ranges is not a bad idea. You know, you can see, the thing I feel like with ranges is you get real clear defined areas of resistance and take profit. So you can see obviously the market within that range there. You know, you could look at the longs from the lows here, shorts from the highs. And I mean, if we just go into let's just go to a 15-minute time frame and look how price reacts when it gets to this point. We just consolidate. We then break that consolidation to the upside. That could have been your entry. Your stops below the low there, target the range high, and you're done. You know, the market then comes in. We've got this kind of sort of weird price action going on here, but, you know, a breach of the sort of lows here could signal that the market's going to trade back to the downside. So, you know, maybe that's something to potentially consider if you're looking at sort of Aussie Swiss on this range. Okay. Short Aussie US dollar. I did like Aussie US dollar at the start of the week. Do I like the idea of getting short? I don't know. Again, we had this close below this key sort of level, which was what was making me kind of incentivized to look for Aussie shorts. My only problem with this market, let me just remove these 6 drawings here. Again, when I was looking at the 4-hour time frame, we had this support zone in here. So I only want to be sure if price kind of, you know, is accepted at lower levels as well, right? Although I like to be short from swing highs, you know, so for instance, if you were short at this high there, I think that's a good trade, but I would be exiting at these lows because the market is obviously finding support and resistance at that point. And, you know, I like the idea of sort of looking at that essentially. Do I like the short here? I mean, I like whenever the market's gone in one direction, I always like the idea of fading that move. And I can see obviously over on this area here, there was a high that formed that the market seems to have kind of come back to. So yeah, I mean, there's a potential for the market to move lower from here. Again, depends on how you look at getting involved with the market. If you're looking at sort of the double top there, break of neckline, that would have been a good sort of short idea there. But we're kind of finding support here as well. So maybe wait for a break of that. That could open a door for a move lower. We've obviously got a little bit of volume in here as well. Bit of a ascending triangle pattern as well. But yeah, that would be the key, I think. A breach below this level. What you want to look for are these low volume pockets, right? Especially if you're going to fade a move. If you're going to fade a move, you need to look at low volume. This is low volume here. That's low volume there. If price breaks into low volume, it's more likely to continue to the next area of volume, which is this area, which we've marked out. If we were to break that, this low volume area here is quite large. So there's a lot more in terms of risk reward, you know, in terms of, you know, a potential move there. So I think if you were to say, you know, what's the ideal for Aussie shorts, I would say if price traded below this low, then this is intraday trading as well, by the way. This wouldn't be a swing trade. I'd be looking for targets down towards this zone. But again, risk reward is very tight there. You'd have to be trading a much lower time frame than this. A break of that is more appealing because you've got lots of sort of space to trade in. What happened to gold and Bitcoin? Well, Bitcoin kind of exploded a little bit, didn't it? But it's on its way again. We had a drop down to sort of the 41,450. I'm still waiting for a bit of a push on Bitcoin. I've still got my sort of level in here at 46.10, which is kind of where I'm expecting price to head towards. So nothing major going on there. Gold, like I said, didn't expect this bull run to this bear run, the bull run to be at an end. To be honest, I do expect gold prices to be a little bit higher. So we're just waiting to see if anything can develop here. If CAD is getting stronger as well, shorting Oz and Kiwi against it looks good. What are your views? Yeah, Oz and Kiwi look not so much Kiwi. I don't think. Maybe the strength meter will update for next week, saying that Kiwi's dropped a little bit. Oz definitely, I feels a little bit more on the downside. So Aussie CAD, let's have a look. So have a quick look. So coming to these weekly highs here, we kind of rejected in at those weekly highs. Some big lows down through here. Sorry, I'll just refine that a little bit. Let's have a look at the 4-hour time frame. Price action's fairly similar, isn't it? In terms of we've had quite an aggressive move higher. I wouldn't mind, you know, if price came back up into that swing high there, rejected it again, that would be almost like a little double top pattern. There could be a potential for a reversal at that point. These lows are very significant. We can see that the market has respected these lows multiple times. So if I was to go short in this market, these would be my first targets. So around about that 8,900 level. Let's dive in a little bit lower. So we can actually see we've got a little bit of change of trend going on here. We've got the hourly kind of making a new low here, which is good. So if I was to dive into this a little bit deeper and say, you know, where's the kind of area, I feel for me here would be what I look for. So this is another little area of support. Okay, you can see there and there, low volume. So because this is such a big level on the weekly charts, that's a weekly level, right? I'd be looking at this hourly high here, and if price came back into that hourly high, I'd be down on my lower time frame, looking for that similar pattern to form. If it did form, that would be an ideal area to look for an entry, in my opinion. And we have this kind of area of support. So what I like to do in these situations is that would be my first target point, okay? Because I don't want to trade beyond that because sellers aren't breaching that low, okay? So you want to be able to have a risk reward ratio that's going to get you down to this area here, for you to take some money off the table, essentially. So this is why I set 2 trades quite often. I like to look for a sort of initial area where it kind of sets up, right? And then I have sort of a discretionary area. So let's say I get my double top and I enter, and then price, goes up towards the higher, enter again, whatever. I'll be looking to exit at this low. If it can breach through that, then I know that there's a good potential that we're going to see a move down towards this area in here, okay? As well, supply and demand traders would be loving that in there, right? So they're going to want to try and get to that price. But would I be short here right now? Probably not, because if I just draw this in properly, you can see there's these lows here, right? Now, if I was to draw a volume profile, let's just get a volume profile, and we'll go from the swing low to current price. You'll see that volume's being built in this area here, okay? That's what this sort of purple area is. If I just zoom in, and you can see there, that's the volume. But look at the low volume, right? Okay, so I expect that if price breaches that, the market moves quicker through the lower volume areas. So then your next area of volume is that sort of area, right? So I'd expect a move like that to happen. But when price builds volume, it's almost like trading a range again. When I say price is building volume, you're looking at consolidations. And it basically means that buyers and sellers find fair value within this point. They're not looking to seek any further volumes at that point. So right now, if we hold here, I'd expect to move back higher, and the market can then build volume again. And then depending on when they don't see its fair value anymore, the market may move to the upside or breach back to the downside. I assume it may go lower just because you've got that low volume zone, and a lot of the times the market wants to kind of fill these areas, okay? So it might move like this, for instance, then move back higher. So I like the idea of Aussie against the CAD. I think that's fairly smart. CAD, let's go look at Kiwi CAD. Might be a little bit of a different thing going on Kiwi CAD. I can see we've obviously come up into the 8400 area as well. This is obviously something we've spoken about in the past, because I've got sort of the analysis on the charts already, and I remember this downward channel, and I'm pretty sure we discussed if price broke out of that area here, we'd be looking at targets at 8400. So looking like we've come back into that and rejected it. So that to me is telling me a story that buyers don't really want to push price through that point at the moment. They're happy to kind of take profits there. So the one thing I'd say, it's just, again, it's another range, isn't it? We're kind of finding support down through here. So if you want to get short this market, I want to be short from the highs, range highs, or I want to be short if price can break lower, fail to make a new high, essentially. Okay. So yeah, there's that potential there, but I wouldn't be looking at anything here until that was tested again for me, because that's where you risk to reward is best. Okay. So have a little look at how oil was sort of doing. Look at the bond yields as well. Sorry, this is something I wanted to discuss. Bond yields play a big part in the strength of the US dollar, and bond yields have dropped quite aggressively. The next kind of point of interest on bond yields now, this is the 10-year. I'll just clone this up. It's coming down towards this sort of 3.8% in here. If we sort of reject 3.8%, then we're kind of heading towards these 3.3s. which looks quite interesting. You know, I think if price got to that 3.3% or just below 3.5% on the 10-year bonds, that could be a good area to see some strength coming back in. Same with the 2 years as well. Price breaching these sort of lows on the 2-year, heading down towards these lows in here, 3.75%. So it's always important to look at your bond yields. You know, they're paint a story for us at the moment. Let's have a quick flick over to dollar index, heading towards that 102 handle. So imagine the 10-year bond yields heading towards that sort of key areas that we just spoke about. You know, that could easily see the dollar index back down towards this sort of 100 level, or 99, 90, or whatever, right? Just for nothing. Hi, John, or just nothing. Sorry. How are you doing? I'm doing really well, thank you. Hope you're well. Amir, gold's acting super bullish right now. Yeah, it will be, especially if dollar's getting destroyed. Then, yeah. So we came down, found that little bit of support at these lows. Breakout. Yeah, I mean, expect a move back to that 2075 area. Guys, give me 2 seconds. I'm just going to mute myself 1 sec. Sorry, guys. Phone was going off. But yeah, one thing I did want to talk about, actually, let's look at the S&P 500. This is something we spoke about on Tuesday. We were looking at, you know, was price going to hold at this level? The problem is, you know, the fact that if the Fed were going to remain dovish, then stock markets could be pushing back to the upside again. And we've breached that by some way now, and we're heading back towards the sort of all-time highs here on the S&P 500. But, you know, and the market could breach that. If we actually go to the Dow has actually made new highs, right? We've made new all-time highs on the Dow now. So we've breached this sort of 36,973 level, and we're kind of above that right now. So Dow Jones flying, as well as the S&P 500. NASDAQ kind of coming into that level as well now. So, you know, these American stock markets back at these all-time highs is quite interesting. You know, will we see that sort of continuation and a breakout now? You know, quite often when the market makes a sort of all-time high after a pullback, you can see a bit of an extension to the upside. So, you know, these stock markets might not hold back now. We're kind of coming into a sort of level where we're going to see a little bit of potential rate cuts to come. So stock market's flying. One that I did want to take a look at was the FTSE. FTSE actually has a really strong bullish sort of pattern in December, and I was looking to try and buy the FTSE, but we haven't actually seen that pullback I was looking for. So I was actually looking to see if we could come back towards these lows in here. We may still get it again. Like, you know, I've been talking a lot about trading ranges at the moment, and, you know, I can see we've got a range high in here. We've got a range low down through this zone. So could the market be playing the range? I've got to also think about what the Bank of England are doing. The Bank of England are looking to hold rates at a higher level for longer because of the inflationary pressures in the market. That's not good for business in the UK, okay? Because that means that borrowing cost is going to be higher. So are we going to see a little bit of a sort of opposite to that seasonal play? And we're going to see a little bit of downside here on the FTSE, which is quite interesting considering where the stock markets are at the moment, you know. So I wouldn't mind actually looking at the FTSE and seeing if we can get some kind of sort of rejection here. So I might actually set an alert here on the FTSE. See if we can get back to the upside. See if we can try and test these swing highs again, and see if we can get some kind of bearish reaction, because I've got a feeling that maybe the FTSE is going to be the one that kind of comes under a little bit of pressure. let's have a quick look at the DAX as well. Yeah, the DAX is at all-time highs as well. Feeling a little bit of pressure there on the DAX. Obviously, rate cuts from the ECB were talked about a little bit earlier. And it's quite funny how, you know, the market still goes and seeks these levels despite the sort of fundamentals at play. Look at that weekly sort of area of support, and the market has took off. So, yeah, I think the stock markets are going to be a very interesting watch over the next few weeks. Oil has actually been performing pretty well as well. This was the zone where we expected some kind of buying to come back into the market. We'll have to watch the developments here, though, because although these were our sort of targets on oil, and this is initially where I got short up in here, you know, it'd be interesting to see if we can actually make a new high and break higher. You know, I think that'll be fundamental to seeing a little bit of oil upside at the moment. I haven't actually looked at the data. Let's have a quick look. Let's see if there's anything here on Bloomberg about OPEC or anything like that. Let's just search. I'm looking for. Or let's have a little look at WTI. Yeah, so we're basically seeing oil advance due to the Federal Reserve aggressive rate hike campaign is over. Let's see if there's anything here that's got anything to do with any of the oil guys. You know, because we've got to be a little bit careful now, because if the dollar is going to slump, you know, then we should see a we should see it affect the commodities. Let's have a little look at where gas ended up, because gas was something I like the idea of buying, but we were looking for it down at these swing lows. So we're not quite there yet on gas. You know, I like the idea of being long at these points. Brent's still down 20% from the high late September on a surge in exports from non-OPEC countries, and fears the demand outlook is worsening. So, although it's been a sort of a bit of a move here on oil at the moment, there still could be a little bit of downside play to this. But we might have to wait to see if the US dollar can find a little bit of strength back. At the moment, that isn't happening, and it could go even further. Like I said, we've got that 102 handle coming up next. I think it's going to depend where these bond yields end up, to be honest. I think if the bond yields end up into these kind of supporting areas, then great. And if we do see some support coming in on the bond yields, then it will flow into the US dollar. But the basket at the moment is just showing that dollar weakness. That's why I don't think buying the dollar is the move right now. With these big kind of levels coming up. Get rid of this now. Right then, guys, we've been running for about 45 minutes. That's gone actually really quickly. I usually run for about 45 minutes to an hour, but there's not really much else to talk about. We've had the big data now. We've got a little bit of data coming up tomorrow, which is China industrial production. We've got PMIs as well coming out of Europe, UK, as well as the US. So maybe that's going to add a little bit more volatility to this week. I will be doing lives next week, but you know, usually after this week, the volumes drop quite significantly. So I'll be on lives for next week, but the holiday week probably won't be doing any lives at that point. So I'll see you in January then. So the next week we'll do another couple of live streams. So We'll see what's going on in the markets. It's probably going to be a very slow week, although we do actually have a little bit of interesting data. We've got the Bank of Japan coming up as well, and they have hinted that they could actually come out of negative rates. So imagine if that happens. I think we're going to see a lot of yen bullishness around. So we'll see if that can continue. So thanks for watching, guys. Thanks to everybody that gave me a question to ask. So Vincent, thank you. Raheem, thank you. Kahota Online, Amir, thank you. Ifran as well. Online and Just Nothing, thank you all for your comments and questions. If you are new here and you like what you see, give me a like or subscribe to the YouTube channel, and I will catch you next week, guys. Cheers.